So along those lines, everybody is here for a certain reason, and the presentation is meant for a particular topic. Today we'll be discussing planning, budgeting, and forecasting. So I may not be answering the question about the second location, about the second office. If I'm not answering your question, please ask me separately, come over, I'm always here, typically 7 days. So if I'm not answering your question, let me know. I'll be happy to set a separate meeting with you. So I'll start the presentation over here. You all know me, you are here because I invited you. So today's event is more about planning, budgeting, and forecasting. We serve 1,200 businesses right now. And number one challenge that we see, a lot of small businesses don't know throughout the year if they are making money or not. 1 month they feel they are the king of the world. They have a lot of money. Should I buy the moon? I'm thinking about buying an island. That's the question we have. Next month they don't have enough money to pay the salary. It's month over month. I'm not talking about year over year. So they have no idea, they have no plan, they have no budget, there is no forecasting. It's very, very common. Right from one-man army to 100 people employees. We have few hundred companies on the payroll. We do this, last year I did business taxes only for 1,200 some companies. And 90% of these people throughout the year had no idea if they are profitable or not. I have a sense of it. I'm not losing money, AJ. Well, I know you're not losing money, but do you have enough money to buy another building? Do you have enough money to start another branch office? So the planning is not there. There is no budgeting. There is no forecasting. So there are several situations when these things come handy. So today's presentation is meant for planning, budgeting, and forecasting. I'll tell you some tricks, some easy to remember tips and what you can do when it comes to planning, budgeting, and forecasting. And I'll tell you, when you hear planning, you hear goal. When you hear goal, you think about SMART goal. So planning needs to be smart. Similarly, budgeting and forecasting have their own tricks around it. Forecasting, we'll talk about everything over here, but just so you know, you have heard about the company. I have 20 plus years of experience. We have clients in all states. As a CPA, there is no limitation for us to serve people in New Jersey or New York only. We can serve people in all the 50 states. Being Indian, we have a lot of Indian clients. I have MBA in finance, CPA 3.7 and 3.66 wealth planning license, and I have a 4 years degree in computer from one of the IIT. IIT is more of a Harvard of India when it comes to the computer degree. So I did 4 years degree in computer, came here, did MBA in finance from NYU, did the CPA. What it does, it differentiates us. We are not you give me the number, I'll type in the number in the software and here is what you want. We know the full cycle. We know if you need to buy a home, if you need to buy the business, you need to show the profit. Otherwise tomorrow you will not qualify for the loan. So even if you're not making money, we'll insist, no, you have to show this much profit. Or the other way around, if you're making $1 million, do you really want to pay tax on $1 million? It can go either way, but you have to have plan. You have to have somebody who is not your just typical data entry person. The example that you have, I mean, you have seen the real example, Vicky, when you're doing your taxes, right? So we have the quality financial and tax services. We have clients in all sorts of industry. Just because I have the IT background, we attract a lot of IT companies. We probably have 60 plus IT companies, a lot of restaurants, Indian restaurants, Italian restaurants, distribution houses, A&P,
Yeah.
SLT,
Yes.
IFS, and more. We have a lot of distribution houses, bigger distribution houses, trucking companies, wholesale, retail store, a lot of grocery stores, a lot of restaurants, a lot of pharmacies, a lot of dollar store, Dunkin' Donuts, Subways. We have a lot of medical offices as our clients and a lot of non-for-profit organizations. I'll be lying to you if I tell you I'm any better than another CPA. There are 12,000 CPAs in New Jersey only, just in New Jersey.
Really?
12,000 CPAs.
Wow.
So as a CPA, how do you differentiate yourself? It all boils down to education. Do you have the right education? Are you just a CPA, or do you have the prior information and the later information? Do you have the wealth planning license? Can you attract the right client? Do you have the MBA in finance? Then it comes down to experience. Did you start it yesterday? Are you one-man army? or the resources. Number one complaints that people have from their CPA, my CPA does not pick up the phone. My CPA is overwhelmed. I sent an email 3 weeks ago. We have 3 locations and 40 accountants, 9 CPAs right now. I mean, I wanted to say 10, one left. So 9 CPAs, 40 accountants. So we are not KPMG, we are not Pricewaterhouse, we are not there. We don't compare ourselves over there. But the market that we are serving, the mom and shop market that we are serving, we are the bigger accountant. A lot of accountants are one-man army, running from their basement or a couple of bookkeepers. So in our segment that we are serving, we are seen as a bigger CPA, or you are a big CPA. Since when? We had a CPA coming over. This guy has been practicing for 37 years. Real story. This guy comes, well, he's 80 some years old. He said, sir, I said, so who is he talking to? He calls me, sir. He said, you have a bigger practice. I run from basement. My revenue is $80,000. I was thinking in my mind a month. Then he said a year. My salary is more than that in a month. So relate the story. Working for 37 years, 80-year-old guy. So in our market, the market that we are competing in, we are the big shot. we are not your one-man army. This is what we do. This is our selling point. How are we successful? Right from business to startup. So we help you start the business, do the plan review, valuation, compliance. We'll do the accounting and bookkeeping for you. Whatever is needed in terms of audit, compilation, review, bill payment. A lot of companies are outsourcing their whole accounting now. We do the bill payment for them. They don't have, we will look at the bank, we'll reconcile the bank every day, and we'll do the bill payment for them. Individual taxes, business taxes, sales tax, payroll. If there's any situation with the IRS or the state, we'll work it out for them. Business sustainability, if they want to buy another business, if they want to value the business acquisition, mergers, financial projections, forecasting, cash flow analysis. So when the client is getting everything under one roof, it becomes their one-stop shop. You have my cell number. Anything, call me, text me, WhatsApp it to me. It becomes a selling point when you have everything together. So today's topic is planning, budgeting, and forecasting. So planning essentially is a process of setting goals. When you're setting goals, you're planning for the business. Before you start a business, before you start a branch, before we start a new project, before we start an R&D, ask yourself the basic question: where the funding is going to come from? Can your business sustain it? Is this the right time? What type of business you want to start? There will be a lot of questions that you wouldn't know the answer to. You're doing it for the first time. You're starting a business, you're starting a branch, you're starting a new project, you're starting a new product. Hire the right people. Set realistic goals. So when it comes to the goal setting, you want to have the smart planning. So I want you to think about planning, budgeting, and forecasting. Planning means goal setting, and goal needs to be a smart goal setting. It has to be specific, measurable, achievable, relevant, and time controlled. Please.
When you plan a goal or something like that, or try to budget yourself, should you plan like a time? You say, okay, I'm going to do it by December 31st.
That's what we're talking about. The goal has to be smart goal, specific, measurable. Specific means what exactly you will be doing, what actions you will be taking. I want to make $1 million, but how? What do I have to do today to make that $1 million? In what time frame? So it has to be specific, it has to be measurable. How do I measure my progress? How do I see if I'm on the right path or not? It has to be achievable. Can I really achieve it? Last year I made $100,000. Can I make $100 million next year? It may not be achievable. It has to be realistic. From 100,000 I want to reach to 150, and I want to go to 200, not from 100,000 to $1 million. It has to be relevant, based on my strength, based on my education, based on my experience. If I say, Rav has 10 pharmacies, tomorrow I want to have 15 pharmacies. Is it relevant? Does it make sense in my situation? I can have another idea, a tax company, another branch office. I can have wealth planning, I can sell insurance. But does it make sense for me to have the pharmacy? It has to be time bound. When do you want to achieve what you want to achieve? That's what we're talking about, the time bound. When can you achieve? Right. So when you think about planning, in the back of your mind, think about goal setting, and think about smart goal setting, specific, measurable.
But what do you do during the course of a session where the expiration of the time, the goal, something that happens or occurs
It will.
where you can
Count on it.
Yeah.
Whatever goals you set, something will come across that will not happen what you planned. That's why we come to budgeting and forecasting. Right now, we are thinking about planning. I'm planning, this is how I want to go. But rest assured, whatever you planned is not going to work out the way you planned. There will be a lot of changes. Things will happen. That's why you need a budget. That's why you need a forecasting. To keep yourself on track. Or if the need be, revise the goals that you have. If really needed, right? But once you are done with the planning, you want to see, as you are thinking, if you are starting a business, what kind of business I want to start. There are 5 types of structure in total that the US government allows. There's proprietorship, partnership, LLC, S Corp, and C Corp. The most popular structures are LLC and S Corp. Unless you have a law firm of multiple partners, you don't go with a partnership. Proprietorship is a one-man army, where I'm doing business under my name, under my social security number. Proprietorship does not really have the legal protection that you should be needing, that you should be having. So forget about the proprietorship. C Corp is meant for foreign ownership companies. When you have the foreign owners in the company, you are only allowed LLC or C Corp. So C Corp is more popular when you are using public funding. If you have crowdfunding situation, if you are concerned about people suing you, C Corp is the best structure. So as you look here, this provides the highest legal protection. This provides the lowest legal protection. This company is easiest to manage, cheapest to manage. This company is most expensive to manage, and more form filing, more formalities, more compliance here. So this is how it goes. So most popular structures are LLC and S Corp. They're both flow-through entity. They have their own pros and cons. I'll give you an example. LLC pays more taxes than S Corp. A lot of people are not aware of it. A typical LLC pays as much as 15% more taxes than an S corporation. You just need to be careful while planning if you have the right structure or not. When you are thinking about your new business, new idea, think about where the money will come from. Can I go crowdfunding? Crowdfunding is getting more and more popular. Crowdfunding was limited to $1 million up until last year. Now you can have $5 million through crowdfunding. But the way it works, you have an idea, you create a project plan, show the forecast, financial forecast, you put it on certain website and you let people bid for it. You decide how much money you want to collect and people will collect. We just had a crowdfunding deal completed for $1.8 million. The client wanted to collect $2 million. They were going to private investors, angel investors, nothing was working out. Went to crowdfunding, people invested right from $100 to $10,000. Maximum people can invest is $10,000 under one name. And they collected $1.8 million. Angel investment is really expensive, difficult to find unless you really know people like Lal. You have to really know the angels to have the angel investment coming in, otherwise it doesn't work. A venture capital, they are the greedy, we call them not the venture capital, we call it vulture capital. They are the people who will suck the blood, not the money.
The short time.
Yes, exactly. So not a good way. You can get the bank loans, but the bank wants to see the past performance. Bank wouldn't really give you the loan just because you started the business. They want to see last 2 years tax history and then the future growth before they give you the money. The next thing we want to talk about is budgeting. As you know, rest assured, whatever you plan is not going to work out the way you planned. Things will happen. So you need to have some sort of sense. Budgeting is not planning. Budgeting is more about revenue and expense. How much is the revenue I'm going to collect? When am I going to collect this revenue? You have to have a sense of monthly, if not weekly, if not daily. There has to be a sense of monthly, quarterly revenue as how much money I'm collecting. When I'll be collecting this money. What expenses will I incur to collect this money? Can I afford it? When you put everything in place, you will know, can I afford to hire another person? I want to have a sales team of 10 people over here making calls for me. My budget does not allow it. If I did not have a budget and if I end up hiring 10 people for my sales goal, next month or a month after, I wouldn't be able to pay the salaries to them. So unless you have a budget, unless you have a sense of your revenue and expense, you wouldn't be able to sustain your business, short-term and long-term goals. Unless you know in 3 months my budget will do this thing, in 1 year this is where I want to be, it wouldn't work out. You can track revenue and expense, and in our type of business, we need 100 people during the tax season, and we don't need 10 people during the off time. So how do you plan the whole cycle, especially in a cyclic business where you have certain people coming in 3 months? Till April 15th, we have 24-hour shop. January 1st till April 15th, 7 days, 24 hours. That's the nature of the business. How do you plan for this thing? If you don't have a budget, not only you will struggle to meet the financial goal. The example that we were taking earlier, 1 month, I have clients who wanted to buy a warehouse, $2 million down payment. After 3 months, the same client did not have enough, so they realized this was the SBA loan, $2 million. The interest was $6,000 a month, so they decided it doesn't make sense to pay $6,000. They paid off the loan. Now they don't have enough money to pay the salaries. They had the money, $2 million, and they were planning to invest into warehouse. They paid it off because they did not want the interest cost. Now they don't have enough money to pay the salary. There is no budgeting. There is no planning in there. You can't really plan the saving. Financial control is what we talk about here. So not having the financial control creates a lot of stress. That's why you see the green over here. You have to have the financial control. You have to have enough money to pay certain months of salaries. If you don't have budget, 1 month you are the king of the world, and next month you are stressing out. Do I pull the money from the line of credit, or do I put the money from my personal account in there? Because there is no budgeting over there. There is no. It's easy to overspend when you have access to money. People take line of credit. They feel, I think this is a good project. This investment. So they have the money, not realizing they have to pay interest, and tomorrow when the salary comes, they don't have enough money. When you think about budgeting, I want you to think about Porter's 5 forces. So take a step back. We are talking about 3 things here: planning, budgeting, and forecasting. Planning is all about setting goals. Goal means a smart goal. Specific, measurable, achievable, relevant, and time-bound. Smart goal. It's not a dream. I'm not daydreaming. I'm setting a smart goal when I'm doing the planning. When it comes to budgeting, we talk about Porter's 5 forces. So here you will see 2 threats of new entrant and threats of substitute. Tomorrow, if a new CPA, somebody right from the school comes out, they can do the work at a much cheaper rate. They don't care. If the work is not done right after 2 years, it will take 2 years for the IRS to send you the notice. After 2 years, you say, what are you doing? You lose him as a client, what's the big deal? Now I have 2 years of experience. I can find somebody else. So a new entrant can always beat your price. Threat of substitute. You create science, CPA services, real story. There is a very, very big brand called Khana Khajana. It's a huge brand. Sanjeev's pickles, right?
Sanjeev.
So we have another client. So what should we do? I want to create my own brand. Big client, $100 million. How about we put the name Khajana? Khana Khajana is trademarked. Khajana is not trademarked. Now we have another brand in the market called Khajana. Real story. I mean, Khana Khajana is not my client, but Khajana is my client. So threat of substitute is there, right? And rivalry. You want to do it for $10, I will do it for $9. That's always will be there. So you have to be aware. Not every client is a good client. If you have clients, what we do, when we pick up a new client, we'll always do it. Why are you switching? If you have a client who switches CP every 2 years, we know the client is going to stay with you for 2 years only. That's the history. For last 3 times they switched accountant for every 2 years. So you have to remember there is an existing competition. And this is the bargaining power of the buyers and the bargaining power of the suppliers. So for example, there is nothing fancy we do here. We have 9 CPAs, 40 accountants. You can hire your own accountant, right? But hiring your own accountant, paying them $60,000, $70,000 is going to be more expensive for you as opposed to us. But this is what we do.
Yeah.
One accountant can do a lot of bookkeeping, a lot of payrolls in one day. You have one payroll, one bookkeeping. Does it really make sense for you to be paying $60,000, $70,000 to have your own accountant? This refers to buying power of supply. When I'm supplying you certain resources, I can do it at a much cheaper than you trying to do it yourself. That's called Porter's 5 forces. You need to be careful when you are budgeting in terms of Porter's 5 forces. So when it comes to forecasting, the last section we talk about is the forecasting. So plan for the future. For budget and the forecast, the difference is budget is set in stone. You plan for the budget once, for the year, for the fiscal year, for the calendar year. Forecast is done either on a rolling basis. Rolling basis means every month I do the forecast for next 12 months. This is referred as rolling forecast. Or on a quarterly basis, where I do next 6 months, next 9 months, or calendar year forecast at certain intervals every so often. So not only it can save you some money, it can help you make informed decision. We have a lot of clients, especially in the IT industry, they have great ideas. They create software. I want to have this software, I want to have this software, I want to have this software. They're trying to invest into 3 softwares at the same time. And when we look at the actual number, they're losing money. Because the software that they're developing is an added expense. So we help them create the forecast and say, out of 3, you can only invest in 1. You decide which one is the best one. So you can make informed business decision when it comes to, so if you're why forecast, if you're expanding into new market, investing your money wisely, you have limited resources, where do you invest? Out of 3 projects. Real-time data, because the forecast is based on the actuals that you have had. If your plan did not work out, you were saying that what if the plan does not work out? That's why you need forecasting every quarter, every so often. Create a situation when you are factoring in the real situation every 3 months, every 5 months, every 6 months. Now, so just take a step back. Planning, we were talking about goals. Planning means goals. Goals means smart goals. Specific, measurable, achievable, relevant, and time bound. Similarly, when we talked about budgeting, we talk about the Porter's 5 forces. When we talk about forecasting, you need to think about SWOT. What is my strength? What is my weakness? Based on these weaknesses that I have, what are the opportunities? For example, I have a tax advice group. It has a few thousand email addresses. I will send the email. People thought a general email. Half of them won't read it. More than half of them won't read it. Half of them will go into junk. I saw the situation. I said, I'm sending this information. It takes me 3 hours to write one email. I don't really copy paste. So what I did, I bought a software called Levitate recently. This software helps me find the relevant people based on the topic. So I don't have to send the email to 5,000 people. And it will say, Lal, this is what you need to consider. As opposed to saying, dear all, it will put your name, put the specific, and it will decide based on which client.
And I thought you were writing personal emails to me.
But that feels good, though. So we just told you behind the curtain.
Exactly.
It feels good,
You
and
give your secrets away.
a lot of people open that email, and we have a lot of good interaction with that thing. So you have to realize what weaknesses we have in the system. What technology can I put in to have an opportunity? Consider this weakness as an opportunity. How do I improve upon it? And what are the threats in the market? Say, what are the competitors? What our competitors are doing differently that we are not able to do, and how do we bring? So we were lacking in technology front. We did not have a timesheet system. We did not have the proper billing system. We probably have $500 million in the AR that we haven't collected. Nobody's keeping. Enough money comes in, enough money goes out. Nobody's looking.